Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 18th of November 2019. So, welcome everyone. Welcome to this Monday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But as always, before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, also just before we jump into the charts, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we update on a daily basis. And I believe you can find a lot of useful stuff here for yourselves, guys. So feel free to visit us. That's on jfdbank.com and click on the research tab right above there. So now then, let's jump into the charts. Now, the first one I want to touch on here is the FTSE100. Now, I talked about this one this morning, and this is what I was telling you guys to keep an eye on. And basically, what I was saying that in order for us to, let's say, to consider a further directional move, we needed to see a nice good breakthrough one of these highlighted areas. Now, and also what I've mentioned that we may see a push higher, but if the price continues to trade below this little short-term downside resistance line taken from the high of the 7th of November, then there is a possibility that we could see this one drifting back to the downside here. The only thing is that for us to get comfortable with lower areas, ideally a drop below the 7,245 zone would be needed. So of course we'll start looking at the nice beautiful number of 7,250, but just for that extra confirmation, 7,245 level, that's what we would like to see. A break of which we would like to see in order to kind of consider, let's say, further declines, because this way the index would confirm a forthcoming lower low, and the next potential target here for us could be around the 7,140 zone. So, which, as you can see, previously acted as a very nice area of support here back on the 9th of October and also on the 18th of October. In terms of the upside with this one here, it would be a little bit difficult here until we actually get this break above the 7,351 zone, because until then, kind of as long as it remains below this little short-term downside line, there is still a possibility for this one to kind of drift lower. So if we do get this break and we do get this push above the 7,350, then yep, it will be it could in a way open the path towards higher levels. Of course, if you're following the news right now, the news that actually came out recently, about an hour ago, is that there are some concerns around the trade deal coming out from China. And if you look at the European indices and of course the US cash indices, they have moved down because this morning all of them, all the major US ones, managed to hit their new fresh all-time highs. That's of course in the cash indices. And but we'll on the US markets, when they open, you will see a nice opening gap here to the upside. The only thing is that gap could be already filled, but let me get to the one of the US indices later, after I look at the German DAX. Now the DAX here is also at a very interesting spot, and for now we're neutral on it, because even though it is overall within this upside trading above this upside support line taken from the low of the 15th of August, still from the very short term perspective, you can see that it's kind of stuck here in this little range, roughly between the 13,144 on the downside and the 13,300 level on the upside. So in a way, as long as it's going to stay trading inside this little range, we are going to remain neutral, but as you can see, it's kind of very close to towards the lower bound here. So in a way, we need to see a nice good break here below this level in order to consider further declines. So for now, yes, guys, keep your eyes on this one. Keep your eyes on this little range here. And again, as I said, there are some concerns coming out from China regarding trade deals, the trade deal. So again, to be honest, nothing new. We knew that's what's going to be coming out in general. So every single time we get good news from good news surrounding trade talks, there's always a bad news that follows after it. So that's how we're kind of trading this the equity markets right now, because like I said, otherwise you need to take everything with a pinch of salt. Any good news that's coming out from the trade talks, you need to take it with a pinch of salt. So that's why, guys, for now, if the US markets continue to trade, or should I say will be selling off today, then we may see this one, the DAX and the FTSE kind of moving lower after hours as well. So yep, keep your eyes on those as well. So now then, jumping into the US equity markets here, and this is the Dow Jones Industrial Average. You can see that last week on Friday it closed already in the at all-time high near the psychological 28,000 level. This morning we saw the cash index pushing a little bit further north, kind of hitting the area near the 28,090, from which it kind of already sold off and drifted lower. So in a way, we will have a nice opening gap here, higher opening price here, but to be honest, like I said, it's going to be very tricky here today. So, well, actually, with the opening price, I mean, it probably won't open higher, but we'll have a nice high here already established. So, let's keep an eye on this one. For now, guys, in a way, even if it drifts a little bit lower here, then still we'll keep an eye on this upside support line taken from the low of the 3rd of October. In a way, we should be saying that as long as it remains above this upside line, there is still potential for the index to drift higher, but we'll be very careful near this upside line, because in a way, if it drifts lower, maybe at some point the market participants will think that this index is way too overstretched to the upside for now, and we could maybe do with a bit of a correction. But that said, that's a little bit of a speculation here, guys. First, basically, how you should stick to this upside line for now. As long as it remains intact, there is still possibility for this one to move higher. But again, today be very careful, because if there is going to be more worrying news surrounding trade talks, then we could see the U.S. equity markets kind of pushing down here, and if we see a drop below the 27,800 zone right here, then there is a possibility that we could see a test of this upside line. I do understand it's not too big of a move, but nevertheless, keep your eyes on this upside line, guys. Well, let's see how this is going to play out. But if this area here, the 27,800 zone, acts as a fantastic area of support, then well, we could see a nice rebound and a push back to the upside. So basically, long story short, for us to consider the downside, ideally we would like to see a drop below the 27,560 zone, roughly around here, and then yep, we will aim for slightly lower areas, maybe even going all the way towards the 27,000 level. But again, that's a bit of a long shot here for now. For now, the main question here is if we're probably gonna see a bit of a correction here, but can this market still correct a little bit lower and then push higher? That's going to be quite interesting to see. As I said, the 28,000 level has been met last week, so maybe the Dow here could do with a bit of a correction. But again, for now, with the downside, it's a bit tricky, because again, like I said, for us to consider the downside, we need to see a drop below the 27,560 zone. So let's keep an eye on this this one. Jumping into a few pairs now very quickly. AUDJPY, so of course that's understandable. So the yen is taking, or should I say the yen is becoming more attractive due to this kind of current risk-off environment. And this is what I talked about this morning as well. So basically what I was saying that if we get a push further away here from this 74.18 level, the next level to watch and the next level from where we could get a little bit more comfortable with higher levels would be on a break here of the 74.45 43 zone, so roughly around here basically. So we never got that touch here. The pair reversed earlier on the news, and now you can see that this is drifting lower. So in a way, it's back below its 200 EMA on the 4-hour chart, and there is a possibility maybe we could see this one drifting towards this upside support line. So this upside support line has been running here from the low of the 25th of August. So yep, keep your eyes on that one. But again, as long as it remains above this upside line, still there is more possibility for this one to move higher than to move lower. But if this upside line starts to break and we see the rate falling below the 73.34 level right here, which is the low of last week, now this is where it could become a real feast for the bears. So that's why keep your eyes on this one, guys. Be very careful. In terms of the upside, you could just now wait this one out and wait. If we see a push above the 74.43 level, then we will get excited about higher levels. Until then, here we're just observing this one. GBPJPY, so something similar happening here as well. Also something that I've mentioned this morning as well, guys. What I was telling you guys, that even if we see a push, well, actually, let me reiterate that during this morning video, we were already breaking the upper side of the range here. But what I was saying that yes, we could see this one pushing higher, but if it struggles to continue pushing above the 141.51 zone, this was my initial target here. Then if it struggles to push above this, or it struggles to stay above this, then we could see this one correcting back down. So this is what's happening right now. We will keep a close eye on this upper side of the previous range here that the pair was trading in, because this time this area could play out as a nice area of support. So let me just actually shift this a little bit here, guys, so that we could see this a little bit better. So now then, so basically this upper side of the range here, the 100 at 140.69 zone, roughly around here, if it acts as a nice area of support right now, then we could see this one reversing back to the upside and pushing higher. For those who are a little bit more on the cautious side, you could just basically wait this one out and wait until we get a push above the 141.51 zone here. This way, the pair would confirm a forthcoming higher high, and we could then target these higher levels. But if this suddenly starts dropping back inside this range here, now this is where all this territory for us is going to be somewhat of a neutral one, because for us to get excited about lower levels, ideally a drop below the 139.44 zone here, which is the lower side of this range. Yep, that's what we would need to see before we could start examining lower levels. I do understand we are missing out on a bit of a move here, but to be honest, overall, we'd rather be safe than sorry. And to be honest, because all this territory could be a little bit of a neutral one for us. So that's why, guys, for now guys, yep, that's what we're going to be looking at here in terms of the downside, and this is the level that we need, a break of the 139.44 before examining lower areas. So keep your eyes on this one, because at this point, as you can see, the area right here, this upper side of the previous range, could now play the role of a nice support zone. But again, as long as it stays above it. So keep your eyes on this one. USDCAD now, very quickly on this one. It's quite interesting developments here on this one as well. Last week I talked about this one, and I was telling you guys to keep a close eye on this upside support line, and this is what I was also saying, that even if we see a break of this upside line, in order for us to get comfortable with the downside, this is the level that we need. We need to see a drop below the 1.3212 zone. We did get a drop, but we never got a close. Even if we didn't even get a close of a 4-hour candle, so you can see how important this area is. So for now, we're still keeping an eye on this one. If we finally get that drop here and we finally get that close, at least of a 4-hour candle below this level, below the 1.3212 zone, roughly around here, then we will consider a possible move lower. Initially, we will only target the 1.3153 zone, which is the low of the 7th of November, because after that we'll see what he wants to do after. Maybe he wants to rebound, maybe he wants to climb back up. So maybe will be some data coming out. So of course, don't keep your eyes on the Canadian data this week. So we do have some inflation figures from Canada. So check out the calendar for that. But again, even with the upside on this one, it would be a little bit tricky for us, because with the upside, for us to start considering higher levels, of course, we would need to see this one pushing back above this upside line. But and this upside line, by the way, is taken from the low, the 29th of October. But in addition to that, ideally, we would like to see a push above this barrier right here at the 1.3252. This way, the pair could then travel towards this area, this high of last week near the 1.3270, 71s, roughly around here. But if this gets broken, then well, this would confirm a forthcoming higher high, and more probably buyers could be joining in here. But again, until it kind of could travel here, it has a long way to go still. So that's why for now, we're with the upside, we're kind of keeping this one off the table, as long as it kind of stays below this upside line. But if it suddenly does move here higher, then yep, and pushes above the 1.3253, then yes, we will kind of consider higher levels. For now, we're just kind of probably more neutral, and even with the downside, we're kind of struggling here with the downside a little bit, because we need to see that nice, good, at least a close of a 4-hour candle before kind of getting excited with lower areas. And the last pair for this session, this is the euro dollar. I talked about the euro dollar this morning as well, and this is what I was telling you guys, to keep a close eye on this barrier right here, the 1.1063. So we are struggling to close even a 4-hour candle above this. So this is what I was saying, that we may see a bit of a correction here, a move back down, maybe a test of this 1.1043 zone. If it struggles to drop below this, then we could see a nice rebound here and a push back to the upside. Initially, we will target only the 1.1093. That's from the very, very short-term perspective, because this is quite a strong resistance area right here. So that's why we're going to keep it as our main target for now. If we do get a quick test of this, that's wonderful. We'll reevaluate this pair again, and we'll have a look what it wants to do after that. But for now, at this point in time, we can see that it's struggling to push above the 1.1063 and struggling to kind of climb over its 200 EMA here on the 4-hour chart. So in a way, this could lead towards a bit of a decline here, maybe a test of this 1.1043 zone. If it acts as a nice area of support, we could see this one reversing and pushing back to the upside. If this 1.1043 starts breaking, we will remain somewhat cautious around here, but we will start considering lower areas. And let me just quickly put this one on the chart. We will start considering lower areas if we start seeing a drop below the 1.1016 zone. So 1.1016 here could in a way open the path towards lower levels. The only thing is that still at this point we will be very careful, because we'll have a very tight stop loss just in case the suddenly reverses and kind of moves back to the upside, because in order for those who are very on a very cautious side, for those to get comfortable with the downside, a drop below the 1.0989 zone here, the low of last week, this is what we will need to see in order, like I said, to aim for example, the 1.0966 or the 1.0939 levels. But For now, kind of as long as it stays here, there is still potential for this one to push higher, but maybe after a small correction. But then again, you can see that the bulls are really trying to fight it hard, and if they do manage to push this one above the 1.1063 sooner, before, let's say, reversing here to the 1.1043, then yes, we will continue aiming for this 1.1093 level, and then we'll take it from there, guys. Right. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching until the end. If you want to join me tomorrow morning, as always, at my Traders Espresso, as always, that's 7 o'clock GMT time. For now, guys, I hope you have a beautiful evening, and stay safe, be very careful, have your stop losses in place, and I'll see you tomorrow. Thank you very much, and bye-bye.